Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Hello, good afternoon, and welcome to a new edition of Lunch with the Shark. I am your host, your ghost host, Vidal, the Shark CFO Espinosa. Yes, they're giving me this eye like here. The production team. I think you guys saw a picture of our production team yesterday. I actually did not know that they were doing behind the scenes. And actually today, I want to show you, we are transmitting as every day live. Here are them, Jesus and Jeff, our production team and marketing team. We are actually transmitting live from Community Boost offices. We actually have a marketing strategy mastermind meeting this morning, and we're having some video shoots today and some more strategizing for our own marketing. We actually had a early meeting also with Tyler. Hey, what's up, Tyler? I know you following us and you're seeing us and you like us. He's actually our marketing coach for everything that we're doing in marketing to grow our firm, our office. And even though we specialize on growing businesses, we need help on our own. We need mentors, we need coaches, we need everything you guys need as well. So thank you for joining. Thank you for tuning in. This is going to be a very interesting episode. And today we are going to digest or dissect the most, I don't know if it's the most important, but I think it's the most current financial statement that we have to pay attention to. And I am actually referring to the balance sheet. The balance sheet is one of the most important financial statements that we have. But to understand the balance sheet better, let me take you through the elements or the basic elements of the balance sheet. We actually have our assets, and assets must equal our liability in capital or equity. Okay? There's no like, oh, there's a little bit of difference here between there and that. No. Balance sheet must equal assets equal liability plus equity. There's no other option. If they do not are equal, there's something completely wrong in your accounting, in your record keeping, in your bookkeeping. It's so funny because when I was in school, in university, you knew if you had everything right, if your balance sheet matched. Okay? That's where it comes to the double entry journals. Like, to every debit, you must equal a credit, right? So if your balance sheet does not equal, then you have entries that are not equally. Credit matches a debit, plain and simple. Now, if you see or if you've seen a balance sheet, you are going to see there that you have assets. What are assets? Well, assets, it's everything that your company owns. Everything that the external parties owe to your company. That's where we come in with your accounts receivable. Okay? Now, you might see that balance sheet has current assets, long-term assets. Okay, so the way you classify them, to a certain point, it shouldn't matter to you. To us accountants and to anybody who's seeing your financial information does, because it goes from what's easily converted into cash, into money, to what it takes the longer to convert to cash or money. Okay, long term. So it goes for short term to long term money conversion. And then we go to the liability side. That's everything that your company owes. Whatever you owe to your vendors, to your creditors, to the banks, to everything. And then you have your equity section, which is your capital contribution, and everything that your company has made in profit or losses through the years, and whatever the owners have taken out of the company. So that's what your balance sheet shows. Okay? Your balance sheet is your report card. How well you are doing. Wow, what's everything doing in your company? And most people that are seeing your balance sheet, if you know how to read financial statements, and it's very funny because do you know how to, if we go back to the Finding Nemo movie, you see Dory that she spoke whale. I don't know if you've seen Finding Nemo, and Dory speaks whale. So if you speak financial statements, then you can analyze a balance sheet. The report card is like how much money you currently have in your bank investments to pay your accounts, your debts, your accounts payable, your creditors. Do you have enough cash to do so? How many times do you have to pay them? You might not know that, but maybe you have $10,000, okay, and you owe $12,000. You are in for a $2,000 deficit. Or maybe you have $24,000 in the bank, but you only owe $12,000. Then your ratio is 2-to-1. Your company is healthy. Okay? That's when it comes to your cash flow management. You need to know how to control your monies, your dineros. Okay? So why is it the balance sheet so important to analyze? You need to analyze your assets. All assets should be divided, and they must be divided into current and non-current. That's when I said that how easily are your assets converted into money? You have your banks, you have your petty cash, you have your inventory. And then your fixed assets, which are your cars, your investments, your fixed assets like your building. If you need to sell them, they are going to take longer than just going to the bank and withdrawing or liquidating those investment accounts, isn't it? Then the importance of your liability. Liability are assets, not like assets. Your liability are what you owe. And also, they're divided between current and non-current, which are necessary to be paid within this year, within 1 year of that balance sheet, which are going to be obligations that you need to pay longer than a year. Your equity is like how much profit have you made through the years? It's stated there. Retained earnings. Is it negative? Is it positive? If it's positive, how is it created? If you've been in business for 3 years and you have $2,000, I would want to see your previous years. You see how I can speak financials? Do you speak financials? Do you remember yesterday that we spoke about fuck your numbers? Actually, yes. Fuck your numbers. You only need to know one number. Not all of them, just one number. Your revenue. Everything else, percentages. Everything else, percentages. Same in your balance sheet. Same in your balance sheet. You need to have a percentage about your retained earnings. And from there, you start analyzing. Is your current accountant analyzing those numbers for you? Is your current accountant even providing you those numbers to you? Are you preparing those numbers? I don't think so. I don't think so. Or maybe you are. You actually need somebody that speaks financial in order for them to translate it into English, Spanish, or the language that you speak, the language that you understand, the language that it's going to help you grow or increase your business. So there's only 3 things you need to know about your balance sheet: your total assets, your total liabilities, and your equity. That's it. The only thing also you need to know about the balance sheet is that it's matching. If they don't match, another important thing about your balance sheet is that whatever is dumped into this report, sooner or later, it's going to affect your profit or loss. It's going to affect your profit and loss, meaning it's going to affect the results you get for that year. So my advice to you is be very diligent on reviewing that particular financial statement, because at the end of the day, you might have a loss when there was a profit. Sooner or later, you might discover that somebody in your company has been keeping incorrect records about the inventory that it's going to convert or translate into a possible embezzlement. Ooh, I've not thought about that. Well, I just gave you an idea here. So, if you guys have any questions, any concerns, anything that you would want to discuss about your balance sheet, okay, this financial statement, currently it's the most important financial statement. Right now, companies are not really on a revenue mode. If you're in a revenue mode, shift out of it and shift into a wealth creation mode, valuation mode, value added mode, okay? Not just revenue. Revenue is important, but you need to generate wealth. How are you going to generate wealth in your balance sheet? Your trademarks, your patents, your goodwill. Do you even know how to calculate your goodwill? You shouldn't. You shouldn't know. But do you know what goodwill is? Do you have a trademark? Do you have a patent? If you don't have that, if you have not recognized that in your balance sheet, which is an asset is what we have, what we own, then your balance sheet is not accurate. Every investor any person that it's looking into your company, it's going to ask for your balance sheet, and they're going to analyze your balance sheet overall. Right now, we are not caring about your profit and loss. Even new loans, they don't care about you're profitable. They care about how much you're valued. So give us a call, send us a message to Invictus-Advisors/Shark so we can schedule a complimentary consultation with somebody in my team or even myself. We can review what you have. We can actually pinpoint what you don't have. It's going to be very easy for us because we do speak whale like Dory. So give us a call. Also, remember, we are continuing with our kids series. Send us a video from 20, 30, 41 minute video with your kids pitch, like in Lunch with a Shark. No, sorry, Shark Tank. Sorry. Well, also with Lunch with a Shark. So we're going to have 4 winners. They're going to win $500 in cash and prizes. Each of them 4 winners, and then 1 major winner. It's going to be selected by our top little sharks, Miguel Angelito, David, and Benny. It's going to be pretty soon, so send us that. And follow us in LinkedIn, follow us in YouTube. We actually have our YouTube channel. Please like us. And if you don't, just like as well too. We don't care. Send us your comments, your messages, whatever you like, dislike. Send it to us. We'll talk about it. Pretty much. We'll talk about it, and something you don't like, something that you don't concur with us in Lunch with a Shark or our thoughts, beliefs, let us know. Point it out. That's going to make us grow, and I will be extremely grateful if you said it. It's been great seeing you today. We are going to cut it short. We are on a mastermind marketing strategy session with our friends from Community Boost. Hello to them. Thank you. And have a good afternoon. Bon appetit. Ciao.
Thank you for listening to Lunch with the Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com, and don't forget to subscribe on Facebook, Instagram, YouTube, Twitter, and LinkedIn.